in the Indian markets while there is a pause, but the war tension is still a worry.
Hi, thank you so much for having me on your show. Always a pleasure. So yeah, I think this is our second day when we are seeing good run up in the markets after a very sharp correction in the first 2-3 weeks of the month of March. My sense is that the valuations have become extremely reasonable, and across the market caps, whether it's large cap, mid caps, or small caps, but more so even in the blue chips and the large caps. And that is what we are probably seeing in the markets at this point in time. Also, as far as the news on the war front is concerned, I think clearly the worst seems to be behind. And I think that is exactly what the market is taking cognizance of. And so our sense is that we have probably seen the worst, both in terms of the market and the geopolitical tensions. We'll see more of de-escalation on the geopolitical side. And from that perspective, I think markets should bounce back and sustain even further.
Right. So more momentum is what you are really penciling in. And Sachin, a few days back when you joined, when the markets were really under pressure, you had said that good stocks should be bought into because the gains will come. So that has been a right call, Sachin. But I want to ask you at this point, in an uncertain environment, a lot of times when the investors are stuck, they use the opportunity of a gain to really exit as well, to book profits and also cut their positions. How would you see that, and what would you advise in terms of new investments?
No, clearly see, I think it's the profile of every individual investor, or you want to call them as a trader, right? So, and just to give you a small example, if say for our flagship portfolio strategy, MK Capital Builder, which I've been managing for now almost 13 years. Say till 31st of December 2025, just a quarter back, we delivered close to say about 17-18% compounded returns. And in this quarter itself, we are down minus 10% across the board in markets. But still, I would say on a 13-year basis, you have a good 16% compounded return, which is at least 2 times the risk-free rate. Just giving you a perspective that even when it's minus 10% in just one quarter, if you take a longer horizon, it still gives you very decent returns. So I am fairly confident that this is not a bounce to sell or book profits or something like that, as long as you are a long-term investor. In fact, even at this valuations, the markets are very reasonably priced, and these are actually good times to allocate more to equities as an asset class.
All right, more time to allocate. But also, Sachin, looking at the war situation and the crisis in the past, a lot of experts had penciled in that while Nifty 50 has already fallen 10%, another 5 to 7% drop if the war continues. With some bit of sanity and comfort really coming in, especially with crude oil prices going below $100 per barrel, how much of an upside now you are viewing in the short term?
Well, at least another 5%, because the fall that we've seen by almost 10 to 12% in this quarter itself, or probably in the month of March itself. So my sense is at least that should get recovered very quickly. So we've already seen 2% plus yesterday, maybe another 2.5%, 3% today. So maybe another 3 to 5% is a good probability in the near term, is what I would like to believe.
All right. So 5%, pick up from here cannot be ruled out. But Sachin, if you really look at all these aspects and factors which are really impacting the market, how do you see the challenging factors which should be on the radar, which could turn the tide, and therefore quick action and nimble-footedness will be rewarded? So crude, and what are the aspects on your radar to be on the watch list very closely?
Yeah, clearly, I think any incremental negative news on the war front, if it gets more intense, or if whatever negotiations which are happening, if they do not actually play out in the right direction, can definitely be even more can actually change the whole sentiment for the negative. So, and of course, that will also have an impact on the crude prices and the gas prices and all of that. But I think, again, if you are a long-term investor, I would like to say a lot of that gets priced in at the
Sure.
valuations that you will be actually investing in.
Sure, sure. No, of course, your time frame and the mindset as an investor really means a lot. But Sachin, you also have to stagger your cash in terms of investment if there is a more downward trajectory. So that assessment needs to be done at a personal level. Thank you so much, Sachin, for joining us on NDTV Profit.
Thank you.
Thank you. All right, let's move on to one of the big stories that